Good afternoon, everybody, and thank Furlough it's Friday once again. I love thank Furlough it's Friday because it means we get a chance to talk to you all and you get a chance to hear more and more about what's going on at ICB and in your profession in general. And this is episode 159, so we're battling through the numbers there, and battling with me as ever, Jackie Mount. Hi, Jackie.
Hi, good afternoon, everyone. Lovely to be with you again on a nice sunny afternoon.
Oh, well, yeah, we've had sun here. It's got a bit dark. It's got a bit dull at the moment. I don't think it's going to rain, but it's not quite as good as it was. So it's obviously moved your way today.
Yeah.
But you've got a big slideshow for us, so we're going to crack straight on, aren't we?
Yeah, I've got some slides for you. So we'll get the heavy stuff out of the way. It's not too heavy, nothing particularly new. It's nearly all updates today. So bear with me. Let me share my screen, and then let's see where we're going to go with this one. Okay. No, I don't want to do that at all. I want to run my slideshow. Sorry about this. Okay. So let's have a look at the updates, first of all, that have come up this week. Nothing particularly heavy this week. So HMRC, CJRS and the fifth stage grant, nothing new come out of that. You've got the dates, you've got the levels, you know exactly what you're doing by now. So I'm not even going to touch on that this week. There is a note come out from Companies House. Might be interesting to some of you. It's not desperately important, but if you are doing some electronically filing for change of names or incorporation of the company, the same day deadline for reporting that has been extended from 11 a.m. till 3 p.m. So if you want to do a same day registration, then you've got an extra 4 hours in which to do that. That cropped up earlier this week. Now, I mentioned last week, I think, that when you do your self-assessment returns, if you're claiming in there the income from the SAYS grant, that HMRC are overwriting the figures if they don't agree with you. Now, I haven't really got to the bottom of this, but as I understand it, HMRC have a problem with their API, and there is a possibility of a fairly major error that's cropped up. Because what's happening is, and I should say HMRC, not HMEC, my apologies. I checked these this morning. That was definitely not a spelling mistake earlier. They're entering pounds as pence on this when it's overwrite. So if you have got a grant of £25,000, obviously 25,000.00, somehow they're losing the decimal point in that. So that's actually going into the self-assessment tax returns. It's £2,500,000, which obviously makes a very huge difference to the tax calculations. Caused by an API fault, apparently, and I think it's working if you're using the uploading software as well from the various tax calculations. Now, I don't think it's happened to everyone, but it has happened to some people. It is expected to have been corrected this week, but if you're currently doing an uploaded self-assessment with a SAYS grant, do go back and check the figures, please, and query that if you think that is wrong or has been overwritten by some vastly inflated amount, because that's quite a high income to pay tax on. Now, this was an interesting one. I had to smile when I read this one. IR35. Now, we did a technical Tuesday on this, and we spent a lot of time looking at how IR35 works, using the CESS tool. Now, 2 government departments, and this week a 3rd department, the Courts Service. So DWP, Department of Work and Pensions, and the Home Office have all been found to have been making errors in the CESS calculations when they've been estimating who should and shouldn't be on IR35. And apparently, those 3 departments now owe millions in unpaid tax to HMRC, which I thought was quite amusing, actually. It made me smile. Not quite sure how they're going to do the internal accounting for that one, because obviously it's all government-based, but I thought that was quite interesting. So if we get it wrong, we're not the only ones, guys, so not to worry. Now, this one came up on the accounting press. Now, Ernst Young, who is one of the big 4 accounting auditing type companies, have actually been fined £2.2 million. This was, I think this came out this morning on the one of the accounting newsletters. Now that's actually been discounted down from 3.25 million because they actually admitted that they'd made an error. And one of the partners who was responsible for this particular audit was also fined, personally fined £70,000. So this is interesting, and it's to do with their audit of Stagecoach. Now, the reason I'm bringing this up is not because Ernst Young have made an error, but it's because of the knock-on effect that could have down to us, and some of the things that you need to watch out for, because it was interesting, the 3 major errors that they fell down on. And I thought it was worth mentioning this. Now, the first one was for underreporting pension scheme obligations. Now, I don't think this has anything to do with auto-enrollment. I think this might be to do with a company pension scheme where you're not paying into an external pension scheme. You're paying, the employees are paying into a company pension scheme. So therefore, the company is having to put funds away to pay future pensions. Now, these pensions are going to go forward for a long time. And apparently, these are all balance sheet items, by the way. They're not profit and loss accounts so much, they're balance sheet items, that they've underreported their pension scheme obligations, which of course is the long-term liability in the balance sheet, because they've got to say they've got to have these pensions, because they should be showing the debit entry in there somewhere, the asset in there somewhere. So the first one was for underreporting pension obligations. And the second one was for underestimating the risks involved in a rail franchise. Now, I think this is the East Midlands main, the Eastern line, Midlands main line. And there's been a lot of problems with rail franchises. And I think they probably underestimated the risk in reporting these figures. So that was one that's unlikely to affect our members. But this is the one that I thought might be of interesting to people, because there was a very large amount in the accounts for a provision for insurance claims. And apparently this was not checked out with due diligence, and there was insufficient skepticism shown by the auditors on this particular item that had been entered into the accounts. Now, we're talking millions and millions of pounds here, but if you scale this down, what I wanted to say is that this could very well affect you if you are doing any form of self-assessment, be it unincorporated or corporation tax, and you're not doing the bookkeeping, then you could possibly get something in the accounts which you either don't recognize or you think looks a bit odd, that you really, really do need to question. Because if you let something go through, now, we've heard from members where people are perhaps overestimating the CJIS that they've received. They're querying the figures that have been put in and calculated by somebody else. So there are all sorts of smaller areas that you could get involved in. Obviously, if you're doing the bookkeeping, there's not an issue here, because you will know exactly where all these entries are coming from. But this is really, if you, like Ernst & Young did here, are taking in a set of accounts which have been prepared by somebody else, and you are actually doing the year end. So you're going through and doing your due diligence, you're checking, you're doing your sampling, whatever else you do to produce a set of accounts for the year end. Just be very careful and be very skeptical if you think something is not right. Now, we've had this conversation with Gary before about looking at external accounts and doing full checks and making sure that if you're going to put your name to something, you know what you're putting your name and your signature to when you submit it. So that's quite important, because Ernst & Young are also the company which are currently being under investigation for the Wirecard investigation, which is the German company. Yeah. And it's the same thing. And Gary knows all about this. So I just wanted to warn you about this one. Gary, I don't know whether you want to come in and say anything at this point on that or not. I know we've mentioned it before.
Well, yes, I don't think it affects many of our members, but I have spoken on a number of occasions to people who are handed sets of accounts by their clients, and then they merely make them look a little smarter. But it's not good enough. You obviously need to know what's going on. Where it does come, where we do get into difficulties, I think, is for organizations that are purely tax agents, and they don't look at the books at all, and they accept anything that is given to them. Now, obviously, if it comes from an ICB bookkeeper, I think it's always got to be a good set of accounts. But there are others who prepare these things. And yeah, when you're putting your name to anything, always remember that you've got to be absolutely certain you know what's going on. Now, obviously, you can't go back through a whole set of accounts and redo it if somebody else has done it. But if you're given the set of accounts by a business person, we all know that business people don't know that much about their accounts normally. So therefore you just can't trust that. And somebody mentioned it the other day, it wasn't one of our members, somebody in conversation, I forget who it was, and they said, yes, well, we always advise get the client to sign to say that they had you in this state and therefore everything is okay. Bunkum, I'm afraid that doesn't work. You cannot assume that just because the client has said everything in here is truthful, or you get it from another bookkeeper, let's say, if you're, because I know some of our senior bookkeepers provide year-end services for some of our members and other bookkeepers. That doesn't work. You can't sign away your liability, I'm afraid. But hopefully nobody's going to end up getting fined 2.2 million, but I think that's a little unlikely. But nonetheless, it's reputationally very damaging, and you need to be careful how you work with that. So yeah, good point, Jackie.
Absolutely. Okay, now a couple of weeks ago I did quite a lengthy explanation of what's happening with the payment of tax for unincorporated businesses and property businesses, called the change of basis. So I've got a slight update on that since the last set of notes I gave. So I just wanted to run through this in case anybody wasn't with us and hasn't had a chance to see that. I just want to explain what's happening. Now, sorry, I hope you can see it. There's quite a lot on this slide, so it's going to be a bit small. During the tax year 22-23, which is what the year after next, or starting next April, from then, what's happening is that all non-incorporated businesses are going to have to pay their tax based on the tax year and not their accounting year. So if you have an accounting year that's based on the tax years, so either a year end that falls any time between the 31st of March and the 5th of April, and those dates under the new equivalence rule will be perfectly acceptable. We think including properties as well, which currently has to go to the 6th of April. You don't need to change your accounting date and no additional tax will be due, but there are a small percentage of businesses who work to a different tax year end. So they might have a year end of April or December or whenever. And these are the people that are going to be affected. Now, I've been through this in detail before, but I just wanted to, as I say, add a few more things onto that. Now, when you come to do this tax payment year, strongly advise that you look at actually changing the accounting date to match the tax year rather than as it is at the moment, because it's going to make your life a whole lot easier. Because if you're preparing tax accounts from April to March, and I'm going to use 1st of April to 31st of March because April to March is easier just to say, it makes sense to have your accounting year end to match it. However, there are quite a few businesses that have been identified as this is not going to be suitable. Now, one of them is agriculture. Now, we've mentioned agriculture before, and anyone here who's with us through IAGSA, you will be well aware of the situation, because with a year-end date of the 31st of March, when you're perhaps into lambing or doing whatever you want to do, you know, that might not be feasible at all. And it's also to do with seasonal businesses. It may not be right to have an accounting date that goes to the end of March. And the other one that's cropping up in the correspondence are large partnerships. Now, these are partnerships where perhaps they have a senior partner overseas. So, for example, a law firm or an accounting firm that's perhaps linked with someone in America or somewhere else in the world, where their year end matches the tax date to the end of December. Now, Gary has mentioned before that the OTS, the Office of Tax Simplification, has been looking at recommending that our tax year runs to the 31st of December, but that's not going to happen in the foreseeable future. So we're working to the 31st of March, and the partnerships might be working to the 31st of December. So if you're in that situation and you're preparing accounts for a business like that, then you may still have to run with the two dates and the two systems.
Surprise, surprise. Now, the only people who seem to be complaining about all this are the firms of chartered accountants.
They're the large and limited liability partnerships as well, because of course limited liability partnerships are sort of a hybrid of limited companies and partnerships. So they're preparing accounts under limited company accounts, but each partner, if they are a partner, has to actually take their income and produce it under self-assessment. And that's going to be an issue and a little bit more work, especially when bonuses are involved. let's not go into huge bonuses, but if you've got huge bonuses and you're ending up paying tax on 2 bonuses in a year, yeah, that's going to cost you a lot of money.
Yeah.
But basically what's happening is in the tax year 22-23, you are going to have to, if you don't do something earlier, and I'm going to look at some dates in a moment, look at paying for an additional 1 to 11 months of tax for that tax year. So that means that your return, which you are doing, which will be due in January 2024, would be anything from 12 months if you're already using the tax year, or if you're not using the tax year, it's either 13 right the way up to 23 months of tax that you're paying, so 11 months additional tax. Now, you have something called overlap profits, which you can bring forward to offset against that. But of course, overlap profits were brought in the first year you were trading. Hopefully your business has grown by then, by now, and the overlap profit is probably going to be a lot less than the profits you're paying in addition. So this could be quite a significant tax increase in that particular year. Now, this is where the change has come to what we said before, because we've done some more investigations, and thank you to those members who've come back, and looking at how you're actually going to do this on the tax return. Now, if your period that you're reporting is up to 18 months, you can do that by a single change of accounting date, and if you want to, and you can report up to 18 months. So let's have a look at when this would happen. So let's say that you have a year end of September, then that's a period of 18 months you're reporting. So you can do that on a single SA 103 self-assessment tax return for the self-employed. And of course, partnerships and properties are going to be in the same area. So what that period is obviously going to cover is if you're doing this in the 22-23 tax year, you are reporting on your normal year's accounts under the basis dates from October 21 to September 22. So that's your normal 12 months that you will report. But in addition, you've got to report October 22 to March 23, which is the extra 6 months. So you can do that in a single return, not a problem at all. However, if your year end is prior to September, you are over the 18 months and you've got to use a slightly different system, because anything from 19 to 23 months has got to be reported under 2 separate sets of accounts. And you literally do this by reporting on 2 SA 103 forms. You'll have one for the first year and one for the additional. So if you have a look at the months, if your year end is August, during the 22-23 tax year, you'll be reporting from September 21, so starting next month, to August 22. That's the year that you would normally report in the 22-23 tax year, due in by January 24, but you have got to add in September 22 to March 23, and that's 7 months. So there's your 19 months, and you're going to have to do that in 2 chunks. So you will tick that you're changing your basis dates. You will then put in 2 SA 103s, one for the 12 months, one for the 7 months. Now, if your year end is currently the 30th of April, that's the worst case scenario because you're reporting 23 months. So you're doing May 21 to April 22, and then you've got to add on May 22 to March 23. So that's your 23 months of accounts. Now, what we don't know yet is whether in this transitional year, HMRC are going to allow for 1 year only to extend the reporting period for a single SAT return for as long as is required. So certainly we've made the comment in our consultation, which is actually going in today, and saying that HMRC have got to let us know what they're going to do. So that's what's happening if you choose to leave this till 22-23. Now, if you have a large amount of tax to pay, HMRC are giving you 5 years to pay off that tax. We know that, we mentioned that a couple of weeks ago. Now, one of the questions, or a couple of questions I've had from members is, can we do this earlier? Because don't forget, when you get to March 23 and into April 24, you are then, sorry, April 23, What happens in April 23? MTD for ITSA quarterly reporting starts. So the problem you've got is if you're doing this in this year, you have got 18 to 23 months or 11 to 23 months of tax returns to do. You're also doing in year for 23-24 quarterly reporting. You may be offset against your accounting year end. It's going to be a nightmare. And you may well have seen on the social media this week, there's letters that have gone in from the professional tax bodies asking HMRC to defer MTD for a further year to allow us to get this out of the way. So we're not sure what's going to happen on that, how much weight that's going to carry and whether HMRC are going to do this. But what I'm suggesting is that you go back now and look at your own clients' accounts. Because let's have a look at how this could work. Now, first of all, I would look at your profits for the last year due to COVID. Now, this might be the perfect time to do this now, because profits for 20 to 21, we all know have probably been hit quite a lot. So if there is very little tax due for the 2021 section of your accounts, might be worthwhile bringing it in. So what I've done now is I've had a look at the dates as if we do this now and change the current year and do it now. Now, the returns that you're currently doing are due in by January 2022. Now, I know some of you will have done your self-assessment tax returns for this year, and you may already have done those for clients who have a different change of basis date. But if you haven't done them yet, it's worthwhile looking at it now. And this, of course, could be imminent now, because let's have a look at what your current return that you will be preparing for this coming January would cover. So let's have a look at the September year end, first of all. So what would your 18 months cover? Well, it's going to cover October 19 to September 20. So that's your first year, which of course finishes next month. And then you've got to consider adding in October 20 to March 21 and do a single 18-month return, but have a look at the tax implications, because you know roughly, if you're doing the books for your clients now, you know roughly what your profits are for this year. Don't forget it includes the sales grants. You could probably estimate what it might be in the next 6 months and chat to your clients about whether they want to change it, so that when you come to do your SAT return for January, you can actually take it up to March 21. Actually, March 21 is gone now. So you should have the figures to see what the tax is. So if you were to run an 18-month profit figure, see what the tax is, see if it's worthwhile changing it this year, particularly if you have an overlap profit, because the overlap profit will offset what you're paying this year. And you could end up, if you've got an overlap profit and an unfortunate bad year, paying a lot less tax than you would normally, and it would bring you into line with the new accounting dates well in advance of MTD coming in. Now, remember the 19 to 23 months has got to be done with 2 returns. So have a look again at the year end in August. So year end in August, your 12 months will go from September 19 to August 20, done and dusted. You've got those figures. And you're also adding in September to March 21. So as a good ICB bookkeeper, you've already got those accounts. Again, have a look to see whether you might like to do it in this year's self-assessment tax returns. Talk to your clients, work out what the tax is. If there is an additional tax, of course, you cannot split it over 5 years. You've got to pay it by January. So it may be that it won't be worthwhile. And I don't know what's going to happen to the payments on account and to your NICs. You're going to have to look at that and work this out. I haven't worked the figures yet because I've literally only been looking at this yesterday and today. So if the period is too short a time, look at shunting that forward a year. Looking at doing your October 20 to September 21 accounts, if you're September, now that's the year you're currently doing the books for anyway, adding on another 6 months, reporting in January 2023. Now that still clears it down before you have to start considering changing it anyway and bringing in MTD on the 1st of April 2024. So it gives you a 3-month gap between clearing down the old accounts and then starting again. And then what you've got to do is you've just got a single year to work out for 23-24 that goes through, that you can report at the same time you're doing your year end, but you haven't got to worry about the double taxation period. So certainly worth going back over that and having a look again. If you have any clients that have a different basis date, and I know some of you do go back and have a look at your figures, because you've actually got most of the figures you need to take that decision. As it happens, unfortunately, due to COVID, if your clients have had a big reduction in income, then it might be that the tax is not too bad, the sales grants notwithstanding. And of course, the same thing happens with property as well. Now, the other thing that's cropped up is I spoke to one member who's got a client whose accounts go back a long time and their self-assessment tax returns do not include the overlap profit. And we were talking about how we were going to get this and how we were going to find out the information. Now, apparently HMRC have assured the powers that be that that overlap information is there. It's in HMRC's system, we hope, and they will award it and allow you to claim it. But in order to do so, at the moment, the advice is to write to HMRC and see if you can get hold of that overlap figure to do this. Now, I'm making no comments about the length of time and writing to HMRC or anything. That's just a chance you're going to have to take. I think when we get to the transition year, 22-23, HMRC are going to have a system in place to automate this so that you can actually see this happening. Now, one suggestion is to put it in the business's tax account. There are all sorts of ways they could do this so you can actually access it. But if you're very fortunate, you're carrying that overlap profit through your accounts anyway. So have a look at it, as I said, see what's going on. And good luck with it. And as I say, if you've got any queries, do come back. Happy to chat it through with you. As I said, I've done quite a lot more research on this now. I've watched a lot of webinars. I've listened to a lot of people. I've spoken to people, and this is something that I think we really need to start looking at this now. Basically, I'd say if you can clear it down with very little tax, I would do it as soon as you can. Now, last update then, selling into the EU, an update. Again, watching some webinars this week. I watch everything that's going at the moment, and there's some interesting little bits. I just want to go through a couple of things that may not have been completely clear. We haven't actually covered this for a while. Something called the rules of origin. This is when you're selling into the EU. If you can prove that the vast percentage, and I think it's around 80%, I'm not sure, of the goods that you were selling originated either in the EU or from the UK, you can sell into the EU with no tariff. Now, there's been a slight easement of this since January, but from January 2022, that easement has gone, and if you are selling into Europe, you do have to make full declarations of the origin, and you also have to have full consumer codes as well, which identify the actual product and where it sits in the export system. So that's coming in on the 1st of January. So if you're involved in this, I know we have members who have clients that sell to the EU, but whether you're actually involved in the export, I'm not sure. We do have a couple of employed members who I know are involved in business that export. So again, there are people out there for whom this is easier. Now, it's become much easier to sell into the EU since the 1st of July because we now have the one-stop shop. Now, basically, we knew that was coming in. It came in on the 1st of January, and until the 30th of June, if you were selling into the EU, you will be well aware that if you are charging your customers VAT, and it's their import VAT, don't forget, we're exporting at 0 rate. So as far as HMRC are concerned, they really don't want to know about this. HMRC's responsibilities stop at the border. So therefore, if you're exporting, it's 0 rate VAT for your UK VAT return, but you're having to account for VAT at some stage in the process. Your customers are going to have to pay import VAT in their own country at the rate charged by that country, not by the UK rate. Now, there are a number of ways around, we've talked about this. If you just sell at 0 rate and you agree with your freight forwarders, the delivery companies, that they are going to deal with the VAT, what's going to happen is that they are charging the VAT to the customer. and the VAT has to be paid to the freight forwarder before they will release the goods. So this is causing a delay in some cases with getting the goods to the customers, which is not looking good for you as a seller into the EU because it's delaying the whole process. Now, from the 1st of July, you can register for VAT in one EU company and you can run your sales VAT through that country. Now, I do know a member, I had a long chat with a member this week, lovely chat with a member this week, who has a very, very complex export system for what they're selling. And they are actually running their EU sales through Ireland. So they are registered in Ireland for VAT and they're running their sales through Ireland. Now, let's suppose that you're selling goods and you register for that in, say, Ireland. You can choose whatever country you want to. You can choose the Netherlands, you can choose France, Germany, whatever, but let's say Ireland for now. Then when you are selling, and this is for consumer sales, and this is nothing to do with online marketplace sales. This is not your Amazon sales or anything because they've got their own system set up. This is if you are selling through your own client's website or your own website and you're selling to customers abroad. Now, that means that as of the 1st of January, but from the 1st of July, you have to charge VAT if you are registered for VAT in the EU country. What you do is you charge them VAT at the point of sale and you agree with the freight forwarding company that the VAT's been paid, and you then collect the VAT in, you declare the VAT through Ireland at the various rates, so rate for France, rate for Germany, rate for Spain, whatever, ranging from the lowest rate of that is 17% and the highest is 27% at the moment, as I believe. Now, again, we've hit this difference with consignment sales over and under £135 now, or €150. Now, if you're selling your goods at each consignment has to be less than €150 or £135. If it's below that, you can do this in a much simpler system through the import one-stop shop, the IOSS. Because what you have to do then is you only have to charge VAT. There's no customs duties or anything. So you're signed up with Ireland, you're reporting through IOSS, you've got all your EU numbers and your VAT numbers that you need, and you will just sell your products, you'll charge VAT, you will then report that monthly. The IOSS is a monthly return to Ireland, pay them the VAT in euros, and then they will disperse it in much the same way as we used to do with the old MOS when we were in the EU. So that's one way of doing it. However, you can't use that for consignments that are over £135. So if you're selling larger items, then you've got to use the non-union one-stop shop because we're outside the EU. Now, again, exactly the same thing happens. You register with the country. Let's say this time we're going to go with France. You register for VAT in France. You do exactly the same thing. You charge the VAT to your customers. The goods get sold. There are no charges to be made at the other end, with the possible exception of customs duties, which I'm not covering at the moment because I haven't quite sorted out how that would be charged. That would probably be done through the freight forwarding company. OSS is reported quarterly, so exactly the same thing. You'll report your quarterly VAT to France, to the French VAT office. You'll pay them in euros, they will then transfer it around.
Jackie, is that £135 a fixed fee, or is it based on currency changes?
Well, everything I've seen at the moment is €150 or £135. So at the moment, I don't know whether that's going to vary. At the moment, it seems to be fixed. Whether that's going to change on a regular basis, I don't know, Gary.
Okay.
Now, what are the advantages of doing it this way? Well, once you have sold the goods, the customers have paid the VAT and all the charges, there is no further charge to the client. So the customer, they know exactly what they're paying. So there are no hidden charges in this. You're obviously charging them delivery and you're paying your freight forwarding company, their delivery, they're going to invoice you for their fees, etc., etc. Now, providing that the documentation is correct, and now that includes these things like consumer codes, so you know they know exactly what you're going. If all your export paperwork is in order, what should happen is that the goods should go straight through, in effect, the green channel at customs, not be stopped, might be searched, Not quite sure if it's certain things they might stop and search, but you know, they do that when you come through customs with your case anyway on occasion. So there's nothing different there. The additional thing with this is that if you have a return comes back to you, you can reclaim the VAT on the returns through the one-stop shop system. So you can do a credit note and claim the VAT back. And also this means overall that you've got reduced reporting requirements anyway. Now, the third alternative is to, if you're issuing stock on a regular basis, then we have talked before about having a warehouse in, say, the Netherlands or somewhere. So you will register in the Netherlands for that. You will export to the Netherlands. And that means that you're importing into the Netherlands. Now, the Netherlands has postponed VAT accounting for import. So that's going to make it easier for you getting the goods. And then once the goods are based in the Netherlands, you can then sell EU to EU sale through the Union one-stop shop. Now, as I said, I don't particularly want to go into this in any more detail because I did say this was going to be quite a heavy session. I will get some of this, I will get this updated on our website hub. So just for anyone who's involved in that or wants to find out about it, then there's quite a lot going on to that. And again, my thanks to Sarah, who put me in touch with an extremely good webinar this week, which I watched. And I have to say, thank you, Sarah, because most of this has come from that. You'll recognize it because I know you watched the same webinar that I did. So hopefully that's cleared up. Just a couple of little queries that are still coming through for members. Remember, you will probably still need to employ an agent in the country where you've got your registration, because you have to have this VAT agent in the country, and there's going to be additional cost to that. Right, I've got a technical question for you. This came into me this morning. I haven't really had a chance to look at this. Let me move that down there so you can see that. Now, I want some answers on this one, folks, please. I'm going to make you think this afternoon as well. Now, a business has used an agency to take on workers, and they are charged VAT for the services. And that service, it might be marketing, it might be anything, cold calling, leads to sales that are hopefully going to be made at a later stage. Now, the business is now registered for VAT, so it can charge VAT, it claims its VAT back. The technical question that's come in, and literally it came in about half an hour before we signed up, so I thought, oh, I'll put that out on the air. We all know that you can claim VAT for assets still in the business going back 4 years. And if you have a service, or you have, if you have stock and you are stuff that you are still using, you can go back 6 months. Now, the question is, can the VAT be claimed back for 6 months under this rule? Because the work that was done in that 6 months could be leading to sales that are happening after VAT registration. So that's my technical question for you. Anyone want to think about that and pop some answers out? I'd be very grateful. I will do some research on this. Apparently, as with most things with VAT, it's not specific with services. So I would be interested in your thoughts on that one. And I'm sure the member will be very grateful. So thank you for that. All right, let's see what we've got.
Thank you. Dare I say, for simplifying that? I'm not sure it was simplified. Nonetheless, it was
no,
quite complicated.
Again, this is probably going to be one of those you're going to need to watch 3 times before it even starts to sink in. It's taken me the whole 2 days to go through those 2 and get them done. Oh, nice chat from Audrey. I phoned and they gave me the overlap figure, and then they sent confirmation by letter. Wow, the system's working, Audrey. So that's good. That's good. So if you haven't got the overlap figure, do ask about it. Excellent. Okay, well, we've got no questions at the moment, Gary.
No, okay, well, I've got a couple
over
of
to you.
Yeah, a big thank you to everybody who liked the picture of Barkley, my boxer dog, as yesterday was International Dog Day. But anyway, so yeah, he's grown. Everybody says he looks a lot bigger. He certainly is a lot bigger. He's a lot heavier, and we now understand what people mean when they say that they're very friendly and boisterous dogs. They are really mad. But anyway, we have just published the official notification of the Luca Awards and the summit for this year. So this year's Luca's 1st of November. It's going to be an absolutely star-studded event. It's fantastic. It celebrates 25 years of ICB, and we'd love for as many of you as possible to be there on the night and join us. It's going to be at this marvelous new venue called the Londoner. It hasn't even opened yet. It's that new, but it is stunning. It's several floors of, well, glass, chandeliers, beautiful colors, fantastic thick plush carpets, the whole bit. And it's just befitting our 25th anniversary, to be honest. So we're going to have some real fun on that night. We will celebrate the 25 years, so there'll be a little bit of retrospective, but the majority will be about the Lucas. And as I've mentioned already, 25 being our silver anniversary, we've decided this year's the Luca will be in silver. Now, not hallmark silver, I have to say, but in silver. So I'm not sure if I can let you see this, but there we are. That is Luca. That is the new Luca. Now, this is a one-off. They'll be coming out this year before reverting back to their normal, more bronze color. And in another 25 years, we'll be having a gold version. Now, whether or not by then, as I'm going to be 92, I'll be there to present any of them is anybody's guess. But certainly, if I can drag myself there, and I'm not locked out completely by then I shall be there. But anyway, so those are the silver Lucas. So all of the Lucas, that's 25 Lucas on the night, 25 again for 25th anniversary, will be the one-off silver. So it's great to win a Luca. It's, you know, very few people are good enough to win a Luca, so everybody please do your best to try and get one, and particularly this year, so that you know, it will be different. You can say I won one of the 25th anniversary Lucas. So that's on the 1st of November. Now, the nominations for Lucas will be going out on the website on the 1st of September, and tickets to the evening will be on the 3rd of September. So, as always, wonderful food, great entertainment, and a night full of really celebrating everything that is wonderful about you, the bookkeepers, about the bookkeeping profession. And a little bit in there. Jackie's sitting there with two of them in the back, of course, there in her shelf. But that's, yeah, okay, that's just showing off, Jackie. But anyway.
There's the other one.
So they are really worth having.
I have to say, I've actually got 4 there, Gary, because Leslie's ones are there as well.
Oh, you've got 4 there, right.
I've got 4, yeah, 2 are mine and 2 are Leslie's. So, yeah,
right.
We're very,
and then you've got those others on there as well. What are they? So dancing awards and various other things that you've got, presumably.
No, the other one actually is the Speaker Award.
Oh, right. Okay. Anyway, so the 1st of November it is. It's the night of nights. So, and it's the, you know, it's a culmination of 25 years of busting a gut to be the best that we can all be. So that's going to be good. The following week, so that's the 8th to the 12th, that's Global Bookkeeping Week. And as part of that, as always, 2 of those days will be concentrating specifically on the Bookkeepers Summit. So that's the 9th and the 10th, might spread a little bit more beyond that. But again, so the Lucas is a live event, the first time we've got together live for, well, 2 years or something now. We're maintaining the virtual event for Summit because it opened it up to a lot more people, but we were not able to commit ourselves early enough to find a venue. We didn't want to risk another lockdown, and I gather numbers are going up again at the moment, so who knows? But anyway, so there we are, 8th to 12th for Global Bookkeeping Week. Wednesday, which is the 10th, that will be Raise a Cup Day, when the entire world of bookkeepers raises a cup to how successful you all are. And again, particularly this year because of COVID and because we'll be doing a bit of 25th celebrating and all sorts of things. So it's all going to be rolled into one massive, great celebration. And then the Summit itself will be on the 9th and 10th, I understand. Now, tickets are out very shortly. Everything's going to be absolutely fantastic. But please, if you want to come to the Luca Awards, get your name in quickly because we do have a limited number of spaces. Right, what else?
Actually, Gary, before you go on, there's a couple of messages there. I'm sure everyone's seen Iris has put up the dates and some links and all sorts of things. And Esther's put a comment up, said it's amazing feeling to win a Luca, which is nice.
Well, that's great. Thank you, Esther. We are actually, Iris is organising this. She's going to bring together some of the people that have actually won Oscars, won Lucas. I mean, sorry, I mentioned the minor award. The Lucas there, our Lucas, and we'll be having a special programme with those winners. It is amazing when I speak to people how much it meant to them to win, and even those who were nominated still make a huge publicity value out of it. So that's going to be fantastic. On the night of the 25th anniversary, the Luca dinner, we're also going to be announcing 25 new companions. Now, if you are given a companionship of the Institute, that gives you the additional C. So if you're a fellow, you become a CF ICB or whatever. And people like Mrs. Mount, of course, are able to add this additional one on. And whilst we're just talking about designatory letters, somebody spotted the other day that one of our members has got ACM after their name, and they wondered what that meant. That actually means an advisory council member. So that's somebody that's been elected to the advisory council. So if you see somebody, that means that's one of the people who represent you at the on the executive and on the advisory council. And these are the people who you get hold of if you want to get anything across to the Institute specifically. Any thoughts you have, anything you want, they feed up to the Institute feeds back down to them, and then they feed out to you, the members, normally through the branch networks, but also through other ad hoc meetings, which they can organise at any time. Next week, we have another Wages Wednesday coming up with Ian Holloway. So be prepared for about an hour of non-stop talk. And
you think I'm bad?
I know. He does rush through a little bit. We are trying to talk him into perhaps breaking this down and having a few more sessions with him rather than try and cram it all in, because he is very passionate about his profession, which is as a payroll expert. And there is such a lot going on in payroll all the time, and he does try to cram it all in. So we're getting some more out on that. Thank Furlough, it's Friday, obviously next Friday again. We've got a technical Tuesday coming up the following Tuesday. Don't know too much about it at the moment, but I gather that's something Sage are doing. They're coming in as a guest to tell us about some new stuff that they've got. I'll wait. We'll have more information by the next Friday so that we can tell you exactly what you can do, and you can start booking up for that. Monday, of course, is bank holiday. So those of you who've missed that completely, you get an extra day off that you didn't know about. But I know most of you say that, particularly with COVID, that bank holidays and everything else have all sort of merged into one. Indeed, they have. So yeah, I think that's the end of my announcements for this week, Jackie. What have we got on the Q&A?
I got one technical question, but just Pauline puts up, when you put up the Lucas, she said, wow, it's like an Oscar. Yes, it is sort of, isn't it? It's why Gary sometimes calls it that.
Yeah. I mean, he actually looks quite smart in silver.
I do like him in silver. He looks very good.
Yeah. And we've managed to put this hand against his chest. Some people thought that he was giving a rude sign, but it was our clever designer, and Cy Sapford designed this. She was a final year student at the Royal College of Art. She did the mold. She made the first Lucas for us, and then she went off to become a modern artist, and she's selling lots of work all over the world. But yeah, that's where that came from. And but people were a bit concerned that occasionally the hand, because it was sticking out from the body, would be knocked off. So we've had lots of people sending us their Lucas back to have the hand refixed. So we've moved it now. I don't know why we didn't think of it before. So yeah, he's holding his stomach, and that's this is the book, the tome that was his Summa Arithmetica e Proportionata, etc., in which he wrote the first ever written down version of double entry bookkeeping. So before anybody jumps on, no, it wasn't the first time double entry bookkeeping was used. It had been used for a long time, but he wrote it down. And it's a bit like, Shakespeare. Everybody claims that Shakespeare copied other people, and some people say that Luca copied other people, but look, he's generally regarded as the father of bookkeeping and accounting, and I wouldn't want to take that glorious title away from him, particularly as we use him as the basis for our Luca Awards.
Okay, we've got one quick technical question come in, and this is from Nicola. Is there any reason that a hostel holiday accommodation can't use cash accounting? Some bookings can be made a year or more in advance, so therefore technically in the wrong financial year. Their booking software is producing reports with checkout dates as the point of sale, but historically they've been using money in, money out to report for VAT and accounts. I suppose it depends on the setup of the business. I mean, if it's a limited company, it can't really use cash accounting anyway. But I'm wondering, I would think it's to do with that, for accruals accounting, I would think it's to do with that, which point does the liability arise for them to pay you? Now, you could always, if you're not using cash accounting, you could always move the invoices into prepayments, I suppose, which takes it out of profit and loss and tucks it in the balance sheet. That will give you a full thing of the money that's sort of expected to come in. But if it's not a limited company, I can't at the moment think why they can't use the cash basis. I can't think of, unless they're using any of the specific VAT systems that you can't mix with cash accounting. There's only really reverse charge that I can think of that you can't. So no, I can't think of any reason why you can't, Nicola, but I will have a look at that for you.
I'm afraid I haven't had much time to look at films this week, but I did pick one up last night. We got a message from LinkedIn to say, Gary, we think this is one that you will love. I can't say I loved it. It was called Zodiac, and it was about the Zodiac murders in America. It's based on a true story, and about a huge range of people all trying to come together to find out who this murderer was. It goes on for, I think it's 2 hours and 45 minutes, which I didn't realize until I was halfway through, and I looked at the time to see how long I'd got left to stay awake to watch this thing. And so, I wouldn't rush out to get it quite yet. But it's got so many stars in it, too many to mention. There's all sorts of people doing little smaller roles in there. But the interesting thing is it goes back to starts off in the 60s and moves right the way up to the 90s. And it shows the way that the American, I suppose, sheriff system worked. And people didn't automatically share any information. So having said a lot recently about blockchain and what it's going to do, I can see why in things like this it would be necessary. When you look at the size of America, but there are a lot of phone calls going on where, can you tell me what happened to so-and-so when he was in custody? Well, no, because that was done by Sheriff so-and-so. His department said, you need to speak to somebody there. And they were going round and round in circles trying to piece together all this information. And I suppose at the end of the day, that's what bookkeepers do. It's a nice analogy, really. We are piecing together so many different bits of information to get a true picture of what actually went on. And so if nothing else, there is that similarity of purpose. And thankfully, we are a little bit more switched on to technology nowadays. But I certainly remember the days 25 years ago when we first started the Institute, and Leslie Ellis first joined us, and he's just about to go through his 90th birthday, believe it or not, which gives me some hope that I shall be able in my 92nd year to attend the Lucas for the Golden Lucas. But anyway,
the way this is going, Leslie will be there as well. I tell you.
Exactly. I know, that's what I thought. I wasn't going to say that, Jackie, but you never know. You never know.
Doing really well.
I think he has a slightly healthier lifestyle than I do. And but anyway, So it's an interesting one, and I've completely lost my train of thought there. So never mind. It's too busy worrying about Leslie. But
we got some more films coming up. Kirsty says 9 Perfect Strangers and also White Lotus, both great. Julie says I wasn't keen on the end of White Lotus. Sweet Girl has a brilliant twist, unexpected. I need to get a life and watch some more films, I tell you. Nicola, you've come back with in your answer that they're a charity. I thought charities had to report under FRS 1 or 2. Nicola, let me look into that, and I'll email you, Nicola. I'll make a note.
Fine.
I'll send you an email, Nicola. Okay.
Where are we? Oh, we're just coming up to 2 o'clock.
I think
3
we've
o'clock, sorry,
covered-
3 o'clock, which is about time. There are a couple of new things coming in. What have we got on there?
No, I think we've.
I think we've more or less covered
most
those.
of them. Yeah.
It's interesting that when we first started, thank Furlough, it's Friday, we got most of our listeners directly through my ICB, but now a lot of you are coming in through the ICB's Facebook groups, which is really great. I know you're using those Facebook groups a lot. So we get a figure today, and then the numbers start to come in of who's watching on Facebook, who's watching on LinkedIn, who's watching on whatever. So we get those pulled together, but the numbers grow, and it's the interesting thing is that most people who come on stay on for at least 85% of the program, and you tend to nip out a little bit. Probably go and make a cup of tea or something, really come back, watch it all a bit later. So watch it over quite a lengthy period. But it's really heartening to see how many of you are actually still enjoying my ICB TV, who are still enjoying listening to what we've got to say, and are not just listening to the first couple of minutes and think, oh, I'm going to leave this. They're actually sticking through to the end. So it's fantastic.
Interestingly enough, Tim has just come up with a question, says, is this presentation available anywhere after? Yes, it is on the YouTube. So, sorry, on the Facebook page. So if you go onto Facebook and follow ICB, you'll see ICB TV up there. And this is episode, did we say 159, Gary? Today?
159, this is,
yeah. And that's usually up fairly soon after this finishes, I think, because it's recorded and it's up there now. So you will be able to see it 159. Yeah, thank you.
And it is on YouTube. I mean, we are up there along next to people like Ariana Grande we were the other day, and some other sort of music videos. So I don't know what they thought.
And yeah, I think Tim's come back and said, yes, it's up there immediately. So I know I get a notification about it because I follow ICB, obviously. I get notification come through that it's available, and then there's a link to it, so it works quite well.
I think most of the people who come in through Facebook, it's not the biggest, because obviously it's normally for different types of things, but most of the people who come on are non-members who pick it up. And funnily enough, we've got a lot of people applying for membership having found us on Facebook, but also a lot of people wanting to sell us stuff because we've been on Facebook. So
yeah,
there's the same as LinkedIn. I think LinkedIn is a more of a commerce orientated platform, but the Facebooks are very well used. We've got one obviously for each of the branches, we've got one for students, we've got one for council members, etc. So they're very tight groups, and they do work well.
I think we're probably there.
Yeah, I've noticed that Adder Bookkeeping have been up to their theatrical best again. They've been doing a take on the Peaky Blinders, if you can see that. Nicola Payne has been putting out some more articles. So some of our members are really getting out there, and that's fantastic because they mention ICB. They say they're from ICB. Everything that you do out there is added publicity. That then links into everything else where ICB is mentioned, and it's this beautiful professional circle of interest. So thank you all for that. And if you have forgotten to mention your ICB qualified, accredited and supported on your website or on your social media, please add us in there. Yeah, it all helps. It does help ICB, but at the end of the day, ICB it's helped you. So as I say, it's this lovely circle of interest. And I think, Jackie, with that, we're about done.
I think so.
As I say, everybody, don't work through Monday before you've realised it was a bank holiday. You can probably get it. Have some lovely time with the family, particularly those of you who've got children going back to school at the weekend, next weekend, before next weekend, and the following week. Enjoy them while you can. And we will see you next Friday, if not before.
Next Friday.
So,
take care, everyone. Have a lovely weekend.
Bye.